Chase Chief Executive, Goldman Sachs, John Thane, formerly of Merrill Lynch. As we look at, there's John Mack, Morgan Stanley, Vikram Panda was in there. Anyway, those are the people that run all the banks in America.
Wall Street fat cats.
Those are your fat cats. They're all in a meeting right now at the U.S. Treasury. I'm Dylan Radigan. By the way, these are the Fast Money Trades. This is Fast Money. Anyway, that meeting going on right now as they try to figure out what they're going to do. As the stock market behaved today, much like Jack Nicholson might have when he escaped the cuckoo's nest and made it into a large ballroom full of whiskey. Had a very good time. 1,000-point rally. You got to go back to the spring of 33.
33. Let me correct something I said on Friday.
Please.
I'm sorry.
Yeah.
Said the Yankees probably won the World Series.
Yeah.
They did not.
No.
New York Giants beat the Washington Senators.
Yeah.
All
Right.
Sorry about that.
So bear in mind, you got to go back to March of 33 to get a rally like the one you got. It was a rough spring that year, by the way.
It was a great spring. It was a gorgeous spring. It was a rough summer.
Okay, the summer was problematic. That was when we had our worst single weeks. Even worse than last week. The point is, Karen, have you ever made more money in a single day than you made today?
I don't know, but it was
a pretty good day.
It was a very big day.
Just extraordinary.
Extraordinary to the upside.
Just made a ton of money, hand over fist.
However,
Yeah, how do you feel?
yeah.
Yeah.
I mean, it brings us back to where we were Wednesday, just a little after lunch.
Yeah.
That's how monumental this rally was.
Really? So you're all the way back to lunch Wednesday?
Lunch Wednesday, a little after lunch Wednesday.
Okay.
And it was really amazing to me, the idea that the market went from so much fear to so much fear of missing the rally.
Still
It's like that.
fear-driving behavior.
Fear is all there is.
Fears and maniacal control here. I mean, give me one anecdote.
I'm gonna. Well, first
It's worse because it's a further confirmation, Jeff, that we've got we're crazy.
if you're smart, you feel worse. I mean, what the fat cats were doing was they're coming up with something to replace the big scam of the subprime.
You know, they don't look
They're
that
other
overweight.
scams. They had internet IPOs that worked for a while, and so
Yeah.
the fat cats are getting together and coming up for another scam for America.
Yeah.
If you're smart, you did two things. One, you bought the first pullback this morning. You held your nose, you bought it. And two, you threw up all your stocks at the end of the day because, frankly, your confidence in the system has to be shot by now if it wasn't before. I mean, at 11.6% rally, that shouldn't happen in a healthy, normal market.
And I mean, you have to look no further than Morgan Stanley, that within 24 hours could have been worth absolutely nothing, or 3 or 4 times what it was worth about an hour and a half ago. That's what happens when you have 40-to-1 leverage, by the way.
That's your watershed event, though. We talked about it. Listen, Bear Stearns' death spiral, they died.
Yeah.
Even death spiral, they died. Morgan, in the exact same spiral, somehow they managed to get out. Could be the bellwether event you're waiting for. But I thought today the key was Neil Kashkari this morning. If you heard him talk about the TARP and explaining who they're going to hire, who they've hired so far, what they're going to do. He's the most eloquent, articulate guy I've seen since this whole thing started.
Yeah.
He should be running.
They should have put him out there and
all this plan.
First of all, I'm sitting right here. Second of all, the guy has a lone wolf cut.
Yeah.
Yeah, so America's confidence was
Listen, America, the reason, let me just read, let's try this again.
Okay.
The stock market rallied today because a bald man was put in charge of the TARP program. And
Correct.
It's the wrong ball man, but
Forget
that
about
doesn't
it.
matter until
Listen.
later. That's why you sold.
Here's
It's
the
wrong
fact.
ball man left.
Here's the thing. Tomorrow morning, the credit markets will actually open up. The bond market is closed today for a holiday. I know the futures were the cash market was closed. Futures were trading. Do you think, Karen, we will see meaningful relief in the credit markets tomorrow to validate the forget whether we 900, 700, whatever it is, that the credit markets will validate the optimism the stock market put up today?
Yes, I do. I mean, I think that concerted world effort over the weekend to basically say, we're going to guarantee anything, everything, deposits, interbank loans, whatever it is, commercial paper, we're guaranteeing it. That, to me, it's hard to see how there's at least a one-day bounce in the credit markets off of that.
And we got leadership.
Soon.
Pleasure.
What do you got? Things kind of crazy, right?
No.
I mean, things get a little. We're back to the spring of 33. Then it's a summer of 33. In 33, they were planning a coup d'état. You know that?
Who's the
Todd and Morgan family are trying to overthrow FDR because of the whole craziness.
The crazy.
You know what I'm saying?
We'd probably be better off today.
Yeah.
But now FASB's relaxed the mark to market.
Yeah. And
Charlie Manson feels a little bad about what he did.
And tigers are riding horses.
Pardon me.
Take a look. You won't be surprised. If I told you this a month ago, you would have been stunned. You would have been like, "Oh, that." And now, obviously, tigers are riding horses.
That's
Just tune into
digitally
it.
enhanced.
That's
Fast
going on.
money.
That's what's going on in America today.
Just two of the animals will be eating during the coming
Welcome to
depression.
the United States of America.
That's our circus right there.
We're back, Brad. All right, welcome back here to the NASDAQ market site. Monday night in New York City, October 13th. It is 2008, but we haven't seen a day like this since the spring of 33.
Yep, great time.
I remember that. Dare to dream.
Yeah. Anyway, speaking of remember, take a look at some of these charts here. 1987 first up. I remember that. It was a little bit of a decline at one point in that year.
Yeah.
We then had a big rally back,
Certainly did.
and then we went straight back down.
Well, after a period of time.
After a period of time.
Yeah, no, it's
A
fair.
few days, weeks, whatever.
You know.
Yeah. Anyway, so that was that.
So stick that in Carter Works piping.
Let's go to 2003 for a second.
Let's go there.
Oh, well, there you go.
Once again, big, it went down.
Did.
Oh, that's down.
That was bad.
That was like, not as bad as 33, but
No,
yeah, yeah.
well, not like
Yeah.
33.
Yeah.
But what really few things are today.
That's the benchmark.
Huge bounce back. Straight back down.
Yeah.
Tell me, my friends, how is it that we are not set up, once again, for a huge push up here,
Of course we are.
and then a whooping?
Well, that about, I mean, what's a whooping at this point?
I don't know, down to
Define
2 to
it.
3,000.
No. Actually, on a
Back to the
serious
old
note,
low. Back to the old low.
I don't think so. I think that low Friday in the Dow, whatever that number was, it happened in like a nanosecond.
Yeah.
That was it. Now that's you could easily see this thing with a low 8 handle again, but I don't think you're going to test that 7.
What do you say, Jeffrey?
I think A bottom's in, D bottom's not in. I'm not going to buy stocks like AK Steel up 30%. I talked to you earlier about getting long financials. I could not feel less good about that.
I bet.
We're becoming socialist. I have no idea how to price that. And as honestly,
We need a
both
new name
statements
for
are
the
true.
show.
You can like them or you can not, but we truly are becoming a socialist nation.
Yeah. All right, what do you got over here?
What do I got?
Yeah.
You know, I'm just a value girl. I'm
Just
looking
trying
for
to pick
value
your way.
stocks. They're out there. There's tons of them.
Yeah.
Tons of them.
Yeah. There you go.
Look, I think we test the lows again in December. We get another shakeout test. I think we have major redemptions again coming year end. But I think it's a great environment for picking stocks. Huge dispersion.
Real quick poll of the day here. Good to see you guys. Let's talk about the stock market here out of the gate. I'd argue today may be the best day for the U.S. stock market in weeks, if only because it didn't behave like an unadulterated lunatic.
No.
Wait a minute.
I'm sorry,
I think
no, I
it
did.
did.
Oh, no, I'm sorry, I forgot it did. Never mind, I take that back. Anyway, here's the deal. Bailout plan was passed. That was interesting enough. Certainly stabilized things a little bit. Credit markets got a little bit better. Remember, the stock market continues to be wedged between a credit market on one side that's a little better but not a lot better today, and policymakers who at the very least set out a fairly coherent set of rules. Whether you like them or not is another conversation, but at least they laid rules out as opposed to trying to make it up on a day-to-day basis. The big headline, $250 billion, Karen, going into the banks directly. The economic theory here, you give the money to the banks lend the money, and you get business activity once again here. That's the line of thought. Doesn't address the toxic assets, however, or the housing stock. How do you look at this?
It doesn't. I mean, I was very surprised to see this plan, and then thinking it through and looking, actually, what is the government paying for, or what are the banks rather paying for that money? It's actually pretty attractively priced money for them. It's not so expensive, even when you
For the banks, you mean?
For the banks, even when you include the warrant, but we don't know for sure the terms on the warrant, so I can't say for sure exactly how expensive it is. Their hope is that these top banks will take the money, lever it up, and start to lend. What will happen in practice, I don't know. I think some of the banks will need to shore up their balance sheets. Others will, in fact, start lending, and that is the hope that they will start to grease the wheels of the credit crisis. We'll see, though, if it actually works.
Other thoughts, Jeffrey?
Yeah, listen, you had a buy list of 9 stocks, the 9 favorite banks that buy. We've got like a 4-second delay
Nice
between
to
us.
see it.
But I'll tell you what, every other stock became a sell today, except for the 9 favorite companies who get this apparently magic money from heaven, Washington, D.C., and the money trickles down to them in the markets. The government's throwing money at them for reasons that I just don't understand why they make it that cheap. But I know that up 400 was a gift that kept on giving. I sold my Citicorp and I sold just about everything else. I wasn't batting down. I was done with my day by about 9:45.
Yeah, really?
Yeah, it was nice.
All right. And now Friday night in New York City, what a week it was, a wild one. If I told you I gave you your best week since 2003 with the worst single day since 1987, you'd tell me we were in some extraordinary period of time, maybe a credit crisis. You'd be right. The stock market today, this week, the single smallest range it had this entire week was 500 points. Yesterday, it went back and forth and up and down 75 different times. Today, perhaps the least volatile day for the stock market all week long, and it still had a 500-point range. Anyway, what I'm going to tell you, I think you don't know. Here's the fact of the matter. The credit markets have gotten a little bit better. They got a little bit better today. That's probably a reasonably good thing, although Mike Dart will be along, he'll argue it. Your thoughts on today and sort of a summation of this week, which, if anything, is better than last week, but I don't know if that means much.
I don't know all the data.
Oh, not since 1933. So let's go back and look at 1933. You can, of course, see the run from April to July of 1933 of over 95%. And, of course, this 3-day sell-off in July of 18%. Overall, 1933 was up 63%. So, if they're going to say we're going back to 1933, what are you going to do about it?